You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, that rocking tune means it is time once again for the Option Block, everyone's favorite bi-weekly source for all sorts of fun and compelling options information. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. A lot of great new shows launching on that network. Check it out if you haven't done so already. If you're subscribed to our main network feed, then you probably have them in your podcast player already on your iPad or Android or wherever you listen to our fine programs. And speaking of iPad and Android and all that fun stuff, if you haven't done so, run, do not walk, run to your favorite app store, the iOS App Store, the Google Play App Store, even the Amazon Kindle Fire App Store, and check out the Options Insider Radio Network mobile app. I know a lot of you already have done so, kicking the tires, lighting the fires, giving us a lot of great feedback, but check it out. The Options Insider Radio Network mobile app lets you download, of course, all of your favorite episodes of the Option Block, as well as every other program on our network. You can stream them instantly from everywhere. Keep them, like I said, download them, store them offline for some subway or plane listening, wherever you like to listen to your fine programs. And, of course, you can even use the app to get in touch with us there. A lot of great feedback in the old app. Options Insider Radio Network app. Check it out. I think you're going to like it. And joining us on the old program today, starting off, let's go in order of proximity today and mix things up a little bit. So kicking things off with the man beaming in from the OXHQ. You know him, you love him as the Viceroy, none other than Mr. Alex Jacobson. Alex, welcome back to the program, sir.
Hey, good to be here, Mark. A real interesting day in the market today. Obviously, a difficult day. But I'll give you a little preview into what was going on at OX. And the trading today was dominated by futures and futures options. The equity desks were actually supporting the futures desk today for a big part of their trading. But the phones were dominated by the futures traders today.
Wow. That actually foreshadows something I wanted to get into a little bit later in the trading block. So I think we're of same minds there, Mr. Alex.
Clairvoyance, if we could just pick stocks now.
Yes, we've been doing too many shows together, Alex. We're starting to read each other's brains here. All right, and next up, I don't know who's closer, if he's beaming in from the local HQ or out in the burbs. So I'll just air on the side of the burbs and say next up is everyone's favorite wealth advisor extraordinaire, none other than Uncle Mike Tosaw from RCM Wealth Advisors and RCM Asset Management. Uncle Mike, welcome back to the program, sir.
Always excited to be here when it's 2 below in Chicago.
Is it that warm today? Wow.
I think so, yeah.
Kind of put the old shorts on.
That's what I'm thinking. If we go above 0, I mean, what's the point of even wearing a coat?
Yeah, why even wear pants at that point, you know? You're already past that point. It's just far too warm.
I agree.
All right. Speaking of wearing no pants, we are also joined last but certainly not least by the man of frenzied typing, none other than Mr. Mark Sebastian from OptionPit.com. Who are you texting all the time when you're on the show, Mark?
Nothing. I'm just working.
Are you texting your teenage girlfriends?
Now, in what world, there is zero chance that Mike Tosaw could ever be closer to where you're recording unless you are in, like, you know, wherever, Lake Barrington or wherever Mike is located.
I don't know. You have some satellite HQ out there in the burbs now, so I don't know which one's closer.
Riverside is like the L goes to Riverside.
Yeah, Metro barely goes to my neck of the woods.
Yeah.
Once you get past the loop, it's all burbs to me here.
Yeah, I mean, the blue line goes to my town. So it is not, I am within close, from my old condo, from my old condo up in Wrigleyville, it was actually further from the Board of Trade than my current house.
There you go, listeners. If you're not local, learning a little something about the local transit system
Riverside
here
rules.
in Chicago. Take the blue line, get off, and just look for Mark Sebastian. He's easy to find.
There you go.
All right, and with the gang all here, we're going to dive right on into the trading block.
The trading block.
All right, and those shouts and that trading noise mean it's time once again for the old trading block, the portion of the show where we break down what was trading, what was moving in the old street today. And it was, as Alex alluded to, a bit of a difficult day for all you bulls out there, all you long-only traders, because we saw a pretty pronounced sell-off. We bounced off a bit of the tail of it towards the end of the day, but still markedly down on most of the major indices. S&P closing down about 0.75 percentage point or so, or nearly 14 handles to 1845. The Dow off nearly a full percentage point to 153 handles or so to 16168. And the Qs finishing off about the same percentage movement as the S&Ps as well. And of course, not surprisingly, getting a little bit of a boost in the old VIX cash realm, closing at 16.02 on the day, up a full 2 handles from whence we last spoke about it when it was flirting with getting a little bit back below that 14 handle. Of course, a lot of this bump, a lot of this vol coming on the heels of all that craziness going on out there in Ukraine, and now the Russians and Putin really putting some boots on the ground out there in the Crimea. By the way, just saying the Crimea, I feel like I'm opening my history books and back to the old Crimean War days. It's kind of interesting stuff. That, of course, injecting a lot of, shall we say, unease in the old marketplace. I think we'll mix things up. We'll start with you, Uncle Mike Tosaw. What was the BBI like today first? I know a lot of the listeners like to start there. Oh, speaking of listeners, before I go any farther, we are recording this, listeners, on March 3rd. So for all of you who like to play the home game, you can now follow along. Uncle Mike Tosaw, how was the BBI? 1, and B, what really caught your eye in today's pronounced sell-off?
Well, for me, it really was, it wasn't quite as exciting of a day as for a lot of people, in that I'm looking at my fruit company, that's up $1.50 on the day. It really didn't do too much today. Looking at gold, obviously that was a pretty big day in gold. Wasn't able to take off the put spread today, but pretty close at this point. Nonetheless, we actually had gold volatility came up a decent amount today, so it's an example of just because the market goes your way doesn't necessarily mean volatility is going to go your way. And then on the stock side of it, I did put on another put spread on the dip today. And my opinion of this marketplace right now, and maybe you guys can differ with me, but with what's going on in Europe, yes, I think that is what's factoring into the market coming down. But just looking at the S&P today, it's only down 0.75%. If things were really that bad, wouldn't we be down more? And we were down lower. Buyers came in. So I guess maybe I'm just the world's only hopeless bull. Who knows? But I'm viewing this as a buying opportunity, folks.
Oh, you degenerate bull, you. Speaking of degenerates, Mr. Sebastian, what caught your eye in today's fury of red on the screen today?
Well,
I was afraid of where you were going to go next.
No. I keep it family friendly.
No, Mark, you muted out my Crimea River about the Russian Revolution. I thought that was hilarious. But really, the VIX was already kind of elevated, and I'm wondering whether a lot of this was already whether some of the fear was already priced in the options. We got a nice move in the VIX, but really kind of an ant move in the market. And VIX closing 16. What is that? About a 1% daily move. So the market's saying, hey, we're worried, but we're not crazy worried. And, the other index I like to look at, the VXST, people like to call the VIX the fear index, which both Alex and I don't love. But if you're going to call that the fear index, I think you call the VXST the panic button index. And that, again, is back over the VIX cash. So shows you that there is some racing around for gamma. So the one way you kind of look at it is the VXST and the VIX are kind of a time spread. And when VXST is trading below VIX, then people kind of want to be long calendars. And when the two are flipped, people want to be short calendars. They want gamma rather than vega and vice versa. And we're now in a position where traders want gamma. And that's really what I saw. And by the way, if you have, for all the listeners at home, if you want to know what we're up against, do yourself a favor and Google search Vladimir Putin and Blueberry Hill, and I think you will get a greater understanding of what kind of crisis we're really in.
I'm scared to go to any links you recommend here on the show, sir. But you mentioned the VXST, an interesting product, of course. A lot of buildup leading into it. Still haven't seen too much actual embrace from a contract perspective. Today's activity give us any bump there? Are we getting over 50 contracts today out there?
The options probably would have been going nuts today, but
what a day for the options it would have been today.
Yeah, it would have been probably really good, but who knows? I think there's no options, but I think they maybe did 50 contracts. But the believe it or not, the market maker, the DPM, in the futures was extra wide today for some reason. Not sure why.
Go figure. I think the SIBO should take that advice. I think that's good advice. They should really go out there and lead with the gamma index of VXST. That's certain to really drive away any potential retail.
I like calling it the panic button index. That's going to be how I coin it. I'm going to be famous for naming it that someday.
Panic button. How about you can call it the bat phone index. A lot of cool things you can go with.
Oh, that's not bad.
Agnes, picture it. Flipping open the Shakespeare head, hit the button. There you go. VXST right there. Done.
Exactly.
Done and done. All right. And before we get too far afield, Alex, rescue us. What was cooking? You mentioned futures, and that really caught my eye because, of course, given all the Sturm and Drang over what's going on in the Ukraine and Russia, that naturally leads to a conversation about Nat Gas. Nat Gas has been moving like crazy over the past month anyway. And now with boots on the ground out there in the Crimea, Ukraine being a big player in that Nat Gas realm, and Russia, of course, being a big producer as well. A lot of seesawing back and forth, a lot of intraday volatility. What I'm hearing from a lot of BDs that we work with is that even ones that have very, very nascent futures operations, all of the risk teams have been all hands on deck for Nat Gas over the past few weeks. So has that really been the case over there at OX as well?
Yeah, actually the whole energy complex has been, I won't even call it active, I'll call it wild in the last couple weeks. And there's been a real stealth rally that today became a real rally in crude. So the whole futures complex today. But the other thing was what Mike Zaremski, our futures guy, calls kind of the breadbasket complex, wheat and corn. Which is what Ukraine sends to Russia. We're up big today. Coffee had new highs today. In fact, the futures complex, in a sense, was showcased by everything up with just the stock indexes down. Now, I know that's a little bit of an oversimplification, but we've talked a lot about how futures options have becoming more and more of a mainstream item. And as soon as both gold and crude pick up, futures options are a big way to play that, and they had a significant trade rise today. The other thing we saw trade lift today, obviously, was options on the RSX, which is the Russian ETF. No surprise there. But I looked at it midday, and I think they traded about 150,000 options in the March cycle, about 2-to-1 puts to calls. I didn't look at it in the last hour. But the great thing about the marketplace today is you have all these ETFs that you can trade, specific segments of the world. I kid about it at conferences about how robust the ETF market is, and now you can trade Kazakhstan ETFs, and everybody laughs at me. But today was kind of one of those days when the fact that you could trade the regional ETFs gave people a play here. We don't have a lot of customers who trade the ruble, but the ruble just got murdered today. And what we saw today is what we began seeing last week. And, we kind of talked about it on Thursday's show, this flight to quality in the German Bund, in the U.S. 10-year. We saw pieces of this happening. I think the German Bund today traded a realized volatility of almost 70%. So, I hate to say putting the politics aside, but putting the politics aside for a moment, this has made for a real interesting market. And I think, as we talked about on Thursday's show, people who took some premium home over the weekend have been waiting for an event like this. Again, I'm not making light of world events, but we had an over-the-weekend event. You had plenty of time to trade it on Friday because the news was already coming out on Friday. And there was decent activity today, but extraordinary activity in the futures and futures options space.
That just accentuates what we've been talking about for a while now. There's so much global macro risk. Pick your region of the world, and it's either in flames or about to be. So if you're only one of these guys who just blasts out whatever premium he can get right going into the weekend, we've been saying for a while now, maybe curtail that. Definitely do it in a risk mitigated fashion if you're one of these guys who insists on doing it. And who knows, maybe this is the opportunity to put a few net units in your back pocket for a rainy day, or in this case, a Crimean invasion type day. I heard a lot of people banding about the concept of Putin puts out there on Twitter today and various other areas. So maybe you wanted to have a few Putin puts in your own back pocket for just such an eventuality. I know heresy buying a premium here, but once in a while it may actually work to your advantage. A couple other things I want to hit on here in the old trading block before we roll on into Odd Block. You set us up nicely there with that Russian ETF because we're going to dive into some size options activity out there in just a minute. But first, a couple other things I want to hit on really quick. First off, Uncle Mike, I know you mentioned you're quite the bull. I know you're probably the biggest of the technical buffs here on the panel. That's pretty much because the rest of us aren't really big technical analysts by any stretch of the imagination. And I saw a little technical note here I thought might interest you today. The SPX has been above its 200-day moving average for pretty much the past year. So I don't know, does that make you more bullish, less bullish? What's your take on that?
Well, I guess by being the technical analyst buff of the group here, I guess I actually look at a chart once a week.
That's pretty much it, yeah.
So it's about, about the same bullish in all honesty. Right now, the main technical indicator that I like to look at, as I say on the show way too much, is when we touch all-time highs. But for the most part, manage risk, and that's managing risk will trump technical analysis, volatility analysis, any type of analysis 10 times out of 10, in my opinion, in terms of your best indicator is good money management.
Yeah, I've always described that as well. I'm not really a technical guy, but I thought I would throw it out there for the rest of you tech heads who are always writing in saying, why don't you talk about more about technical analysis on the show? There you go. That's your 1 minute. That's what you get. Before we move on with all the craziness, I know Alex did have one a little bit more heartwarming, warms the old cockle story that he saw today and he wanted to discuss here on the old trading block. We're always getting into craziness, madness, meltdowns in the markets and how terrible and dangerous derivatives can be, at least according to the broad media. Well, here's one story that warms the old cockles. Alex, I'll let you lead the charge on this one because I know this really caught your eye.
Well, the story here is twofold, and it's a $25 million contribution from Jump Trading, which is a derivative trading firm headquartered here in Chicago. It's been around for a long time. And there's two messages here. Number one, it's what they did is terrific. But number two, Paul and Bill, who I met years ago, who were the original principals of Jump, and I'm not even going to try their last names. This goes into sort of the history of the trading community. The origins of the trading community in Chicago were, and I know I'm going to get emails for this, the Board of Trade was Southside Irish and the Italians, and the CME were the Jews and the other kind of ethnic groups that weren't welcome at the Board of Trade. And I apologize if that offends anybody. But if you read the history of the exchanges, it's gospel truth. And these are guys who started out as locals, little guys, trading in the D-mark. And it's a tremendous story because when you look at the Chicago trading firms today, which are all today behemoth large firms, many of which have been acquired by international banks, they all had a ethnic or partner flair to them. And in almost every case, they were started by guys with very little money, who were very entrepreneurial, who generally had good risk management skills. And that means either they were engineers, math majors, Blair Hole, obviously an engineer, a rocket scientist. And I know people ask that question all the time about, can you really make it today? Can a little guy, do they have a shot? And I always tell the story about Ken Griffin from Citadel starting to trade in his room at Harvard, admittedly, trading converts, paying huge commissions. He gave $150 million to Harvard last week. But all these guys and ladies started with nothing. I mean, they came to floors and mentored with somebody and leased seats or clerked or ran for nothing or $300 to $500 or $600 a month, and they became the trading giants of today. So every time a listener writes in a letter and says, does it pay for me to go in with $2,000 or does it pay to me to go in with very limited capital? The question is not, does it pay for me to go in? The question is, how much time should I invest learning? And the answer is, that's the investment. So it's a great story from two counts. I apologize for monopolizing the time and telling the ethnic stories of the Chicago exchanges, but two guys who started small who have given away tens of millions of dollars. And that's the real message.
Yeah, it's a little heartwarming story. Always nice to end the trading block on something positive. And of course, it also speaks to something we've been hitting on a few times here on the show in the past, is that there are still some prop shops and trading firms around, and a few of them are healthy enough to not only thrive, but do things like this, like give away some money to some medical research and other fun things like that. I'm looking at their site now while we're talking. They're saying they have over 350 people now in New York, Chicago, and Singapore. Not all prop shops going the way of the dodo. Another takeaway, I think, from that. Very, very heartwarming story. See, I always accuse you of being throwing cold water on the show here, Alex, and here you are lifting us up to a higher level. So I apologize, sir.
I never need an apology from you, Mark. But yeah, it's a great story, and two guys who started out as locals. It doesn't get any better.
All right, and with that note, we're going to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time once again for the Odd Block, the portion of the show where we break down the interesting, the intriguing, the sometimes downright bizarre activity that we're seeing here in the old options market. And as Alex alluded to in the last segment, we're going to kick things off on the Russian frontier there with good old RSX. That is the Market Vectors Russia ETF, closing today, no surprise, at $22.76, down nearly 7% today on the day. This is the name that usually trades, around 4,000 contracts, so pretty big from an odd block perspective, but not lighting up the tape by any means from a broad options perspective. Yet today, surprise, surprise, really, really lighting it up, doing 166,000 contracts. And what's interesting about this is a couple of things. First off, it's not maybe the paper you might initially expect. you'd expect in a day like this with an aggressive one-direction move, people using options a lot of times to just chase some deltas. They're going to write calls, they're going to buy puts, they're going to use it to get short deltas, chase that move, get in maybe at a better level or a more attractive price than they could just getting into the underlying. That's a typical use case on a day like today. We certainly saw some of that. But what we highlighted on the site this morning is a little more interesting. We saw actually some put sellers flocking out here to RSX, and they were coming out in some pretty hefty size. When we wrote this up this morning, we were talking about the March 21 puts, and we saw someone coming in blasting out 2 blocks worth of these March 21 puts for around 40 cents. They totaled at the time 19,000 contracts total. So that alone was nearly 5x the ADV of this name just in this one trade. By the end of the day, we saw a total of nearly 50,000 puts going up on that strike. I don't know if all the ladder of that is all writing. I'm assuming there's some buying floating in there as well. But at least the initial salvos on this strike were pretty sizable opening sales. And we can say opening with a great deal of confidence because the open interest on this strike, a whopping 1 contract. So 1 contract opened, 50,000 going up today. Not surprisingly, people come into play, but surprisingly, people drawing a line in the sand out here in RSX saying 21 this far, no further. Senor Sebastian, what's your take here on this just size put palooza out here in RSX on the short side?
You know, it is yet to not pay off dumping puts since 2011. And I think this is the same kind of players. I mean, one of these times, one of these big size put sellers is going to eat it. But until that happens, every time we get a big dip like this and a big spike in volatility, the big houses are going to step in and sell. Be reminded that in 2008, the RSX was 10. So if Russia really does get some serious sanctions this in the next week or two, this guy could be very sorry. But it's basically a big bet on much ado about nothing for the Ukraine trade.
Yeah, he's stepping in and fading the move hard from the beginning. He's not letting it play out a little bit. He's really saying from the get-go.
No, I mean, he's already down in 7.5 cents, and that's a tough move to put on into that. I don't know that I could do that on my own. That's a type of trade I'd wait a couple of days before I jump in rather than the first day.
Yeah, that's kind of the impression I have as well. I agree with you that you get those hardy, put premiums right in the opening salvo, and you want to harvest them and capture them, and it's very attractive. But yeah, this thing, you're right. This could go in your face very, very easily, very quickly. Who knows? UN gets involved, we get involved. Who knows how much farther south this could go? And this name could be looking at single digits. So this guy getting in front of it. I'll give him points for cojones on this one, if perhaps not pure risk management. Who knows? He's got a little bit of some loose wrist strings over there, which is kind of interesting. But yeah, we'll keep an eye on this one because this is a very near-term one, and this could easily be the sale of the month or the year, or it could be could come back to bite him pretty badly. All right, moving on to the other side of the spectrum, away from Russia and into the fresh foods, fresh markets realm with the Fresh Market Inc. Ticker symbol TFM closing today up about 1% on the day to $33.87. And what we saw, this is the name that does about 1,000 contracts a day, doing about 3,000 today, so about 3x ADV. Not a super ton of volume, but comparably pretty high. Certainly not RSX volume. And what we saw, again, was surprise, people piling in to the March 40s. But again, this is not someone coming in and just gobbling up upside. These are actually people coming in to sell. It went up in 2 blocks of about, when we profiled it, about 1,300 contracts going up for about 20-25 cents. Looks like a total of 1,800 went up on the day, so nearly about half of the ADV going up in that one strike. Nearly 9,000 contracts open on that strike, so it looks like it could be someone either doing it against stock. They went up marked as spread, so could be a buy right, or it could be someone just taking off some longs. We do have earnings coming up in about later on this week on the 6th, so this guy may be choosing to take off his long gamma a little bit early before the actual event itself. Senor Sebastian, I know you play pretty heavy in fresh market every day, so what's your take here? Are these 2,000 calls? Is this you?
Oh, that's all me. Yeah, it sounds like a fresh take on trading. No, I'm kidding. I think you've hit the nail on the head. I think you're right on.
Here we are. Next up on the old odd block, we have a newcomer, actually. This is EXACT Sciences Corp, ticker symbol EXAS, EXAS. Closing today at $13.55, up, essentially up fractionally on the day. Not too much going on there. We saw them doing about averaging about 1,200 contracts a day, doing nearly 18,000 today. So a big bump here in good old EXAS. And to find out what was going on, we got to roll on out to the April strikes here, the April option chain, where we look at the APE 15-16 and the 17-18 call spreads going up. Looks like about 4,000 times here each. So you do the math, it's about 17 or so thousand contracts that went up just in this one spread. The open interest on each of these strikes ranging between 2,000 and about 3,500 contracts. So not really closing, but there is some open interest on these strikes. It went up in 4 blocks. Looks like the APE 15s went up first, and then the rest of it kind of went on afterwards. Looks like it's pretty much just a bit of a roll here onto some new strikes. Senor Sebastian, aside from your exes living in Texas, what else do you think about good old EXAS here?
I mean, I don't know if this is a roll or if this is just, if you look at Vol's up on all the lines. So this is clearly somebody expecting something to happen. I'm less certain that this is some sort of covered call roll up, and I'm wondering between those spreads whether it's some sort of call stupid play, because Vol's just up across the board in the strikes. So there is a lot of open interest on those, so you just never know. But that is just a lot of buying, and Vol's up nicely. So it's either a couple of call spreads or some sort of call stupid play.
I was going to say the same thing. This has the aura, the whiff about it of a Tosaw style call stupid. Not exactly the right size, but still, this has all the other hallmarks of a Tosaw style call stupid. So Tosaw, I will respect your anonymity. If you don't want to confirm or deny that this was you may feel free to demur. But by all means, sir, I know you like playing out here in EXAS.
I can neither confirm nor deny that is myself or any clients with whom I am trading.
There we go, listeners. And you wonder why he refuses to do the stupid webinar. He doesn't want to give away his secrets. The man never met a stupid he didn't like. Right.
Oh, I have.
Maybe one. All right, and last up here on the old odd block, we have a name we've talked about a few times in the past. This is good old JC Penney. They were lighting up the tape across the board last week. Just total overall options over there at OX. And OX clients in general love some JCP. This is the name of late. Been doing about 100,000 contracts, doing nearly 200,000 today. Closing today right around $8, up about nearly 10% on the day. And what we saw, despite this rally, was some interesting paper. We're going to roll out to August for this one, the August 2 strike to be precise. We saw 18,210 of the August 2 puts going up for about a dime. We also saw some ratio put spreads going up in May, buying the 8s, selling the 6s on a ratio. But the size action out here was in these ridiculous August 2 puts, of which there are 22,000 open. So bear that in mind as well. This could be additional, someone really drawing the line here on some crazy bankruptcy protection, or someone closing out some existing open interest. I'm going to hope for the latter. Senor Sebastian, what's your take here on these crazy out-of-the-money puts here in JCP?
It's JC Penney. That's all I can say is you never know with that stock. JC Penney is, there are a lot of people that think this is a stock that is going to end up in the bankruptcy toilet. There's all kinds of plays on that, but this may or may not be a closing. But, if it's opening, it's a very cheap bet on this company being on the pink sheets in about 5 months.
I just love that. If this is indeed opening and someone really thinks they're hitting this way, there are so many other ways they could play this. Maybe not for a dime, maybe for a little bit more than a dime, but for relative premium levels, I mean, this is a catastrophe play it here. Interesting nonetheless. They went out 8 cents at 9, so he's already taken it a little bit on the chin. But we'll file these in the to be watched. Well, of course, listeners, by the time you hear this, you can check the open interest yourself when you're playing the whole game, see if that is indeed closing. But if not, we're going to file these in the to be watched. It should be pretty easy to see if these ones come to pass. The two handle out there in JCP. Crazy, crazy business. And with that, we're going to keep on rolling right on into Alex's favorite part of the show, because it's time for the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the old Xpress Block. As you know by now, this is, of course, the portion of the show where the Viceroy dons a fancy hat and takes us deep behind the scenes, behind the velvet ropes, into the inner sanctum known as Options Express. We had a little bit of a peek there at the top of the show with all that craziness in the energy futures complex. But Alex, in addition to all that, what else was cooking over there in the land known as OX?
It was a pretty traditional day in terms of equity names, and dominated by Tesla and Apple, which were two of the only green lights today on the equity trading floor. As I mentioned last week, Lulu, which was a perennial name, had a bit of trade lift, and then it just got slammed at the end of last week, and it had quieted down again today. But the equity desk spent a lot of time today sporting the futures desk, which is not uncommon on event days like this. And the dominant trading was in the metals, the crude, the gas. Coffee hit a new high today. Mike Zaremski, our futures guy, showcased that as well today. Trading was active today. It wasn't like customers were, deer in the headlights and just sitting and not trading today. There was some premium selling from our traditional put and put spread traders today, trying to capitalize on the move down and the volatility. There was, as we mentioned last week, a lot of VIX call buying and a lot of hedging that was done last week. Some of that got lifted today. But again, you had almost a 15% move in the VIX. So the call buyers who carried through the weekend did well. It was an active day overall, which is good. Makes me think people think this market is resilient. And it was a decent day in terms of the overall trading activity.
And I like any day that you can come on the show here, Alex, and give us a little bit of an update on what's going on the futures and futures options side, too. I know we don't get into those areas very often here on the show, but they are indeed robust centers of activity over there at OX, some days more than others, certainly the past few, certainly falling into the latter category. But yeah, interesting stuff. And I want to encourage the listeners, too. You don't have to just write in and send in your questions about equity and index options and volatility. I know a lot of you guys like to play out there, but there are more than a few of you out there lurking, I know, who like to play in some sort of futures or futures options product. Could be Nat Gas, could be energies, could be like Uncle Mike out there in the metals. Whatever your commodity du jour is, we want to hear about it. So you guys can write in with your questions on Nat Gas, vol, or whatever else you want to talk about in futures or futures options spreads as well. We'll be happy to discuss it here. We're not just an equity and index shop, even though we do delve into those realms quite a bit. But as Alex said here on the show, a lot of stuff going on out there in the commodity realm. All right, thank you for that. Mr. Viceroy, you may now remove the old cap, and we shall keep on rolling right on into the strategy block.
The strategy block.
All right, right, everybody. Welcome to the Strategy Block. This is, of course, the portion of the show where Uncle Mike, he doesn't have a fancy hat, but he does have a very, very fancy red velvet smoking jacket, and he puts it on once a week for the Strategy Block, and he grabs those stone tablets of his, and he descends down from the mountain, a.k.a. the 30-foot little hill out there in St. Charles, and he proceeds to dispense options, wit, and or wisdom. Take your pick, listeners. So, Uncle Mike, what do you have cooking out there with your minions today for the old strat block?
Well, one thing in particular, but I think you're being a little bit generous on the size of the hills out here in St. Charles. I'm thinking there's one spot that could be considered a 30-foot hill, but it's just kind of more of a valley by the river. But
okay, 15 feet. You're right. I was being charitable.
Yeah, that's kind of what I'm thinking. So, yeah, the minions and I we had a discussion today in our minion trading meeting earlier in the day, and I want to reach out to the eternal bulls out there, such as myself. Once again, this is for a section of your longer-term trading portfolio, in my opinion, that's combined with puts. Now, I want to highlight a position with which we're in right now. Real money, real markets, all that fun stuff, and it's on SPY. And so we have a group of clients that are in SPY, and we are long the underlying. And there's other clients that are also kind of in the same position, replacing the underlying with a call, but nonetheless, it's the same concept. So we're long SPY, and we're also long one June 174 put. June 174 put we got into in early January, actually on January 2nd, I believe it was, $4.31, currently trading 304. And we've been able to harvest some premium in terms of doing bull put credit spreads throughout the course of the last couple months. And today was another one of those days where we sold another put spread against it. Now, one thing I want to emphasize, if you're doing something like this, if you're a home gamer, so to speak, and you like to sell credit spreads or bull put spreads, whether you are a speculator or you're doing this as part of a bigger piece to a bigger puzzle like what we're doing, one thing that I'm not able to emphasize enough is try to avoid weekend risk. And this weekend's a prime example of that. Last night when I'm just looking at my phone, checking the futures quotes, it's one of those things that whenever I am in some type of a short spread over the weekend, I'm always nervous come 5 o'clock Sunday night because I'm thinking, oh man, what if we had a big gap up or a gap down? But if I'm long premium over the weekend, it's really not so bad. So by doing that, I was long the 174 put over the weekend. So if we did have some type of a doomsday, we had protection to the downside, and we were long the underlying. And so I had closed out last week's weekly put spread last week. And so instead of trying to take on some risk over the weekend, I decided to wait until Monday. And this is something that's very common for what we do. Once again, not a huge fan of taking on risk over the weekend if you can help it. So today, as the market opens at a lower level, we got into the 180.5, 183.5 put spread. We're short that put spread, and that's designed to create some time decay to help finance the long-term put at the 174 level. So right now, in terms of the position theta, using the stock, using the long put, using the short put spread, we have a theta of 0.51, so to speak, per 100 shares. So we've neutralized any time decay on it for the time being. And the other thing with which I want to emphasize with you on this is that, are you able to make the adjustment should it continue to go down? Now, credit spreads are easy. If the market stays the same or goes your way, any idiot can do them then. But if the market starts going against you, what's your plan? And we talked about this. We had a situation a couple of weeks ago where we actually did have to make an adjustment downward with the put spread. But we were able to do it because we had more money on the table. We actually got out of it when it started to go against us instead of doing the old, well, I think it's going to come back, and slowly bringing your hand over to the mouse and then seeing the market go up a tick. Oh, good. Thank God I didn't get out of it. I would have messed that up. We don't do that. When it touches your number, you got to take action. The final thing that I want to emphasize for today's lesson, so to speak, is, or just to reemphasize, is weekend risk. If you're a spread seller, whether you're selling condors, whether you're selling put spreads or call spreads, I'm not saying never go into the weekend with risk, but just understand that when bad stuff happens over the weekend, a lot of times it can be amplified in the marketplace, and take that into account when trading in this type of strategy. And that is all.
What happened to you? And that's one to grow on. That's what I was waiting for, sir.
Well, you don't really grow on this one. You're trying to. We need to have the trade work well for us. So maybe next week it'll be grow. If the trade grows, we'll grow on it.
I was waiting for the do little tune. I'm sure we'll probably get sued for that, but it'll still be fun.
It can be one to grow on, I guess. But it's not quite one to grow on today.
All right, just one to ponder.
Not feeling it.
One to ponder, perhaps.
There we go.
All right, and that is going to do it for the strategy block. And now we're going to keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right, listeners, you know what those car horns mean. They mean it is time for our final segment, Around the Block. This is where we tell you what we're watching for the rest of this week. And at the top of it, it's kind of obvious, of course. Everyone's kind of playing the wait-and-see game, including our friend out there blasting out a bunch of puts out there in the Russian ETFs, that everyone's playing the wait-and-see game over there in Ukraine and seeing what happens with Russia if they expand their presence, if they dial it back, if more international parties get involved. That will clearly weigh in on what happens on the markets, regardless of all these other micro factors we're about to expect. So that's our overarching macro factor for this week. Something different every week. This week it is Russia. A few weeks ago it was Argentina. Take your pick. Flavor of the week, though, is Russia. But there are some other things looming on the horizon. We talked about Argentina a lot. Still kind of lurking on the back burner a wee bit there. More specifically on the options front, you'll remember, listeners, we talked last episode about all that fun stuff going on out there with Goldman and their research with investor days and their pick on the March 97s there in Caterpillar. Well, that analyst/investor day they were talking about is actually tomorrow, the 4th. So they were saying at the time, you want to load up on those March 97s. It's like 1,000 or so went up today. Caterpillar is still hovering at 96.31, so just south of that 97 strike. Total of 3,400 open on that strike, so still not that many. Only like 1,000 or so have gone up since we talked about it last week. So not that many people piling in, at least on the retail side, into these trades here on the March 97s. We'll pay attention. We'll come back next episode, let you know if indeed Cat rallied the anticipated 5 handles, or this is all just a lot of smoke and mirrors over nothing. Of course, other things on the old calendar. You got, of course, jobless claims on Thursday, and the big non-farms adding another layer of vol to the marketplace here on Friday. Aside from those big things, Uncle Mike, what is catching your eye for the rest of this week, sir?
Well, in general, the non-farm on Friday is it's definitely going to be something with which we watch fairly closely. Gold's breaking out again, or I should say still. And we're going to continue to watch that and monitor it closely. And that whenever we have an event like this, the other thing with which is kind of concerning about this rally and on the gold side of it is that gold, or GLD, did outpace silver or SLV today in terms of the upside. So with that in mind, it's something we're going to be monitoring closely, because the last thing we want to do is have it go up and then miss all the profits.
All right, and Senior Sebastian, what are you watching for the rest of this week amongst the legion of things I just outlined, or maybe something completely different?
Well, I think it's interesting. The way we reacted to the ISM data after the way we sold off against the ISM data last month was really telling. I'm not sure that economic data is going to matter as much. We've got I think the one thing is non-farms will tell us whether we need to discuss, whether the Fed's going to matter. And so if non-farms are in line, Feds don't matter. And if non-farms are a really big miss or a really big win, then I think the FOMC will matter. So that's really what I'm going to be paying attention to, aside from the Crimea River. That's going to be about it.
All right. Take us home, Mr. Alex. What are you watching for the rest of this week, sir?
The U.S. 10-year and the German 10-year, both of which have become the safe haven here. To both Mike and Mark's point, yeah, you can't ignore non-farm. You can't ignore the payroll numbers on Friday. But I think world issues right now are going to overshadow macro U.S. economic issues. Now, obviously, if the payroll numbers are disproportionate to one side, or there's a big hit or a big miss, that will have an impact. Mike's point, the gold rally, be watching if the gold rally can sustain itself. Now, clearly some of the catalyst for gold was the Ukraine, but we had the rally going on prior to that. We had the rally in crude going on prior to that. When and if this Ukraine thing settles, it will be interesting to see if gold can hold the low 1300s where it's gotten to here in the recent rally. But world events right now are overshadowing economic events. It'd be interesting to see if the FOMC even talks about world events. But that's what we're looking at.
Yes, world events, the Crimea. Where is Otto von Bismarck when you need him? Unfortunately, that's all the time we have for the Around the Block segments, also all the time we have for this episode of the Option Block. But really quickly, let me go back and check in with each of my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods that may interest you. Starting off with you, Mr. Alex, Mr. Viceroy. What is cooking in the land of OX education?
Full webinar schedule, and I'm just going to showcase a couple of events. Wednesday, March 5th, we're going to be talking about interest rate products. Second webinar on Wednesday, we're going to be talking about the futures complex, futures and futures options. March 6th, Marty Kearney from the Options Institute, my old shop, is going to be talking weeklies. And then March 8th, Saturday, first live event of the year, Jimmy Ruzan, former Group 1 market maker, will be out in Crystal City outside of the nation's capital doing it's a half, three-quarter day event. If you can make it out, please go see Jimmy. Does a great event. If you can't make it out, all the live events now are done in a virtual environment on our site, and it's just like being there. You can ask questions. You can interact. That's this Saturday. Two other points to make. Idea Hub is almost in the last stages of being ready for Schwab Mobile. So Schwab customers will be able to see a version of Idea Hub hopefully by the end of March. And Idea Hub for Futures, which got shifted so the mobile product could come. Idea Hub for Futures is in the kind of final review throes with the futures legal people. The technology people, I think, are close every time I say that. I have one of the product development people comes over and dope slaps me. And I now sit with the product development people, so they're all going to come over and dope slap me. But Idea Hub for futures options, maybe as early as April. Looking forward to those.
Good stuff, as always. And Senior Sebastian, what's cooking in the land? Oh, the pit, and indeed Swan.
Oh, we've got our new version of the Gold course coming out shortly. And, so a really big announcement coming out shortly as well. So, and then I think I'm making a presentation somewhere tomorrow. I don't know much about that, but maybe Mike Tosaw does.
Uncle Mike, do you have any response, any rebuttal, sir?
We have a webinar of the week. We are actually doing a special version of TNT this week, not on Thursday night trading. It's going to be Tuesday night trading, just to honor Mr. Mark Sebastian. He's going to be talking to us about the dangers of the credit spread. Sign on up as at www.rcmwealthadvisors.com/webinar.
Mark, I was just giving him a hard time on the last episode. I can't believe he got you to do a webinar with credit spread in the title, given how I know how morally opposed you are to that term.
Yeah, no, I know. But,
We had to negotiate the word danger in there, and that's what I think got him to sign on the dotted line.
Exactly.
All right. That is going to do it for the old option block program for today. And on behalf of Mark and Uncle Mike and Alex, and of course myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing and for writing in with such great questions. We'll get to them on Thursday, and we'll see you then right here on the old option block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Quality